Hi traders, it's Eddie here from TradeView and welcome to episode number 129 of Trading Talk. In this week's episode we show you a technique to enter trades in a trend and try to avoid taking trades later in the trend and getting stopped out. I think you're really going to enjoy this episode. Also, thanks to everyone who attended the 2019 Algo Trading Conference. It was a fantastic event last weekend. And of course, thanks to the speakers, to Roger and Ernie, to Andreas and to Hein for presenting some excellent models and giving some fantastic presentations. I think everybody who came, the feedback's been that it was really another level. Look, we're looking to go to another level again in 2020, and we are starting to take bookings from the 2020 conference. We've already got a number of people who attended last year attending again. So if you want to come to the 2020 conference, please contact us on the desk ASAP. Give us a call on 03 9018 5438 to secure your ticket early. Hope you enjoy this video, and until next week, all the best with your trading.
Hi traders, Eddie here from TradeView. Welcome to episode number 129 of Trading Talk. We'll start with our risk warning. This presentation is provided for information purposes only, and you shouldn't regard it as financial product advice. It's not specific to your objectives or financial situation. It is general information about building automated trading models. Also, in this presentation we will show some backtesting results. They are hypothetical or simulated performance results, and they have certain limitations. They're not an actual performance record, and they don't represent actual trading. None of these trades have been executed in the markets, so they don't qualify for being real world trades. We're not saying that you're going to get any of the results that you see in any of these videos. Alright, today's episode, let's call it trend trading. Don't buy the top. What does that mean? Well, I'm going to show you in a second, and the reason I wanted to do this video is because we've been helping a lot of people lately build models, especially in the workshops. We had a lot of international clients here after the conference, and we've done 2 workshops in November, December, just because we were so busy and had so many people wanting to come in. And one of the things that I keep on seeing is people trying to fix their strategy, either trying to modify the exit or something like that. And one of the common things that is happening is they're getting into a trend and they continue to buy up to the top of the trend. Let me explain how you can use what we're going to talk about today. Basically what we want to do is, and I'm going to try and explain how to fix what we just talked about, buying up at the top of the trend. What we want to do is, in an uptrend, so if we've identified the trend, we only want to take longs in the earlier part of the trend. And what people are doing is they're taking longs all the way up the trend, and what will happen is the further the trend continues, the more likely it is to reverse, because it is going to probably end at some point. What we want to do is we want to try to avoid buying the top, obviously. Here we go. As I said, the longer a trend goes, the less likely it is to continue. And what you can do with this week's episode is, it's just an example, and when I was putting it together I thought, how can I make a pretty basic example that sort of illustrates the concept, and I think it actually does it quite nicely. And what you need to do now is you need to take this, I mean you probably can use it to some extent as it is, but you can change that and adapt that in many different ways to how you want to use this concept, and I'll explain that as we go on in the video. Alright, let me come and show you something on MT4. Here we have, this was actually the last last trading talk that I did, and what we're going to do to illustrate this concept, we're going to use the same period of testing. I think I've been saying this a little bit in these videos, and this is something that I think many people need to focus on. They really need to understand the idea that they're trying to build and understand the concept and make sure that they can execute that. If you're able to do that, then you're able to apply it to, I guess, different market conditions, or manage the model in different market conditions. If you just build one model and run it over all market conditions, there is a chance that it could work really well if the market has favored the market conditions have favored your model for that period, but it may also, depending on the type of model, fail in certain bits. It doesn't mean that the whole strategy is bad, it just means that you might want to assess how you run it in certain market conditions, i.e. another layer of thinking on top of the thinking of the model. So let's call it another layer of management. Alright, so here is the model that we had last 2 weeks ago before the conference. And what we did in this one is if we were above the moving average, this one is a 20 period, but we can use whatever we want, and basically let's call that a trending market. I think we could probably all agree above the moving average could be a good indicator that it is trending upwards. What we would do is we would buy, and then we would sell every certain amount of points to lock in the profit. We trailed the stops up on the buys. And then what we did was, so these buys all got closed here when the stops trailed up. And then what we did was we took profit on the shorts once we got a bar that closed below the moving average. So that tended to work pretty well. We can do a bit more with that probably next week. But if you notice here, what's happening is we're buying and selling. And we're taking buy trades up here. And this is basically the end of this trend, if you like. So it's moved a certain distance away from the moving average, and then the further it goes, it's going to come to an end, and then we retrace. So if we keep on buying all the way up the trend, what's going to happen is here, these trades are going to lose. If you have to close them out here, we're going to have to do what we did here. And look, this model made money when we tested it, but we've had to hang on to these longs through this period here, and it could have just as easily continued down because we don't know what's going to happen in the markets. In hindsight, fantastic to hang on to it. Turned out that it works pretty well, but when you're actually in the trade, this wouldn't be a very strong long signal below the moving average and some big down bars there. Okay, so what we want to do this time is we want to work with this same time period, and what we're going to do is we're not going to buy all the way up the trend. We're going to stop buying somewhere. Let's try and do it somewhere here. So I'll show you the concept, and again you're going to have to work out how you want to do this yourself, and how you can modify it for your own trading. So this was 2 weeks ago. We'll show you the new one in a second. And what we're going to do is we're just going to do the buy side, so it's a bit easier to understand. Maybe next week we'll try and combine a few of these concepts together, or maybe the next one I do. I've been hogging these for a little bit, so I might have to let some of the other traders here have a go as well. Alright, let's have a look. What I'll do, actually I haven't even downloaded this one, so I'll go to my EA Lab and I'll show you what the logic is. Actually I'll show you here. What I've done is I'll put it on, no, we don't need that one, or this one. What I'll do, this is the blank charts. This has got a, no, actually, I think this one should be blank chart. So what we've got here is we've got the dollar yen daily. We've got a 20 period moving average. I'm also going to put in here another moving average. I'm going to put a 10 period. I mean, these don't matter. You can use whatever you want, obviously. There we go. So now we've got a few crossovers and so on and so forth. So what we're going to do, I mean, I'm not saying moving average crossover is the best definition of a trend, but it is one. Look, we've got a good crossover here. Got the downtrend, etc. But this should sort of illustrate the point. And you can use whatever method you want to use to define the trend. It's still basically going to work in the same way. So, one sec. What I'll do is I'll just save this as a template. Call it tester. I'll overwrite the other one. Alright, good. So what we're going to do here is this is going to be the logic. We're just going to say if we're above the moving average, the 20 moving average, then we can buy. And I'm just going to let it, for argument's sake, take as many trades as it wants if it's an up bar. I'm going to take the entries on the 5-minute chart. So it's probably going to take a lot of entries if it's an up bar. It's going to take you'll see on the 5-minute chart, but we're going to manage this from the daily chart. So what I'm going to say is, I'm going to say if we get a moving average crossover, as in the fast one crosses the slow one, so the yellow crosses the blue up, and then I'm going to say we're in an uptrend. I'm going to say that if we're in an uptrend, what we're going to do is we're going to set a marker to the low of the bar when the crossover occurs, so it's probably going to be this one. Alright, what you could do is you could say the lowest low of the last 5 bars, which is probably even better, and then that's here. Alright, and what I'm going to say is if this is when the trend occurs at that crossover, well, let's look back and let's find where the start of that trend was. So let's call it the lowest low of the last 5 bars. I'm just thought of this on the spot. I didn't necessarily use this, I just used the bar, probably this one. And then what I'm going to say is I'm going to say, look, this trend is going to go on for a certain amount of time, but it's not going to go on forever. So let's just say it goes on for, from here, I don't know, this amount of time, whatever that is. Can we move that? It's going to stick to the bar. Alright, cool. It's going to go on for a certain amount of time. And then what I'm going to do with my trades is I don't want to enter the whole, I don't want to enter at the top here. So all I'm going to do is I'm going to try to enter in this first, I don't know, let's say half of the trend. Then what I need to do is I need to figure out, well, how am I going to define this first half of the trend? So to keep it simple for this presentation, what I'm going to do is I'm going to define it as a number of ATR, or you can use the TVI ADR indicator if you want to. And I'm going to say that, you know, if the market has already moved a certain amount of average daily range or average true range from this starting point, which is this low here, or like I said, if you want to make it, you could make it this low here, which is the lowest low of the last 5 bars before the crossover, then don't buy anymore. So I'm going to say only buy if it's moved less than, let's call it 3 ATR. So let's have a look. I'll put this on. We used, there we go. So if we look here, the ADR is, I'm just sort of guesstimating, you get the idea. So the ADR is about 80 points of the dollar yen. Alright, so if we go here, what's that? It's 100. You know, there's 80, so I want to put about 240. Okay, that's the top. So maybe we say it's about 2 ADR or something like that. Okay, so that's basically what we want to do. Now let's have a look at the model in EA Lab. I hope that was a good explanation, but I think you're going to see it when I actually do it on the charts. So what we did was I actually took the same model from last time and I just sort of chopped and changed it a little bit. That was from episode 128. So here my entry was this previously. If the close is greater than the moving average on the daily, and if the bar open is less than the bar close, as in it's an up bar, then buy. So same really simple entry. I've added a bit of other funky stuff to it, which we'll go through in a second. Then what I've said is, this is my logic to close it. Select all the long orders, and if the bar low is greater than the order open price, then modify the stop to the low of shift 1. So basically, if the daily bar closes, if the low of the daily bar ends up being greater than your open price, then you can move the stop up to that low, which means you've locked in some profit. So, you know, bar any sort of slippage or, you know, major move going through your stops, you can close the trade out there and it will be, you'll have locked in some profit. Then I've said here as well, select all the long orders, and if the low is less than the moving average and the order age in bars is greater than 300, close the order. So what that will do, this is just another way to get out of it. So again, I can sort of prove the point of how it works. It says that if the low is below the moving average, which is, I'm pretty sure you can understand that. So basically here, if the low of the bar is below the moving average, or here, for example, if we're still in any trades, and I said if the order age in bars is greater than 300, basically what you need to do is you need to when I first built it, I said if the close of actually I could probably do it like this. So I'm always thinking of stuff. What I could do is I could say actually no, that doesn't work. So what happened was I said if the daily low is less than the moving average, then basically well, what I first had was if the daily low is less than the moving average, close out all the trades. But what would happen is we're looking at the shift 1 bar, so I'll show you. So what was happening was when I started entering trades on this bar, it would open up some long trades and it would say is the low of shift 1 less than the moving average? If so, close. And this low of shift 1 is, so it would actually close out all the trades I was opening here. So it didn't really make any sense. Alright. So what I had to do is I said that if the order agent bars is greater than 300, the reason I said 300 is you've got to look at the chart that it's running on, not the daily chart. It's running on the 5-minute chart. And so how many 5-minute bars are there in one day? Well, there's 12 5-minute bars in 1 hour times 24. So I just said basically if it's greater than 300. So that should be enough. Let me figure out the exact math. So you got 10 times 24, 240 time, and then add another 2 12s on there. So you've got sorry, another 224. So you got 48. So you got 288. So probably 288 is the number, but you know if it's greater than 300. It's going to work just the same. Alright, anyway, that's just going to avoid basically closing out the trades straight away. Alright, anyway, that was a long and complex explanation, but I think you'll understand the logic of the model when we run it. So let's actually we'll have to download it and run it. Alright, so we'll do this. I'm just popping this up on another screen here. Okay. This is all happening on another screen. And we'll compile it again. This is on something on another screen. I mean, I could probably bring it over here. Pretty much all trading talks on this computer. Alright. So we have here 129 version 2. So I'm just going to run it on the same time frame. And what I want to do first, right, in our expert properties. Oh, actually, look, hang on. What I'll do, I'll run it, and then I'll come back. Actually, no. Sorry, guys. What I'll do is I'll show you first, and then we'll come back. So if we go here, what I've said, I forgot to explain how all this rest of this logic works. Okay, so what I said is, if the daily moving average, this logic up here, so this is just about entering the trade. Pretty simple. We'll come to this line in a sec. And this bit is just about closing, the different ways to close the trades, which I'm sure you'll understand. Now, this bit here says, what this bit up here is about, it's about basically setting where we start the trend, and then measuring how long the trend has been going for, and we're measuring it by a certain number of ATR. So remember I said here we're going to start measuring the trend basically when we get the crossover, and we're going to measure a certain number of ATR from the low when the crossover occurs. So up here, so basically the way to measure that is, you know, the low of the bar when the crossover occurs to you know, the close of the next bar, and if that is less than a certain amount of ATR, then we can enter the trade. So we're going to say 3 ATR. We can play around with the number. Alright, and I'll show you how that works. So let me show you how that logic gets built. Alright, so what we're saying is, if the 10 period moving average, oops, I've actually messed this up. If the 10 period, oh no, sorry, that was correct. If the 10 period moving average is less than the 20 on shift 2, and if it's greater than 10 is greater than the 20 on shift 1, then we're going to set a variable called in trend to true. So we're going to say that we're in a trend. So when this happens, you get this crossover, let's just call it here for argument's sake, then we are in the trend. And we set that variable in trend to true. And we're also going to set a marker, and we're going to say set start trend to the low, the daily low of shift 1. So again, if we come back, let's say for argument's sake it is this one, so we're going to set it to the day low of here. Alright, or actually look, maybe we've crossed over on this one, so let's say for argument's sake it's here. Shift 1, so the bar before we had the crossover, we're going to set the low to there. The low, we're going to set a marker on that low. Then what we're going to do is we're going to say, we're going to set the other one up. If it crosses back the other way, we're just going to switch it off. Then we're going to say if the crossover happens the other way, we're going to set in trend to false, and we're going to set the price of that start trend to a really, really big number. Okay, because if we set it to a really big number, then what happens is when we do the calculation, which we'll come to in a second, I'll explain when we get there. Also, what I said here is in set trend, I actually set that is false, and then sorry, in start trend here, I set the default value to a big number as well. I'll explain in a sec, because you don't want to set it to 0, because what will happen is, we'll show you. So what will happen is, then when we go to enter the trade, what we're going to do is we're going to check. So we're going to say, if the bar close is greater than the moving average, pretty simple, and if the daily close minus start trend, the daily close of shift 1 minus start trend is less than the ATR factor times the ATR, and we get the up bar, then we buy. So let's have a look at what this means. So we're saying if the close of shift 1 minus start trend, so what's going to happen is we're going to set the start trend to the bar low of day 1. So we're going to set the start trend to, let's just call it for argument's sake, this bar. So that there is going to be called, that's where we're going to set the start trend to there. Okay, then when we go to enter the trade, we're going to go, is the close of bar 1, right? So we're going to, this bar is going to close, and we're going to say, is the close of bar 1 less than, I'll go and I'll read it to you. So is the close of shift 1 minus the start trend less than the ATR factor times the ATR, so a certain multiple of ATR. So what that means is we get here, and then we're going to say if the close of shift 1 minus this one here, so basically go. So is this distance less than 3 times the ATR? If so, then we can go through the rest of the rules and place the trade, because what's going to happen is as we keep going up the bars, we go to say here, we're going to say is the bar close of shift 1 on the daily minus this less than 3 ATR, and at some point it's not going to be true, and then therefore we're not going to be able to trade. So we're not going to be able to trade closer to the top of the trend. Now I just want to show you how this works in this example, but you know, there is better ways to define the trend. Okay, and also what you can do is look, there's different ways that you can do it. They might be a bit more involved, and also depends on what you want to use, whether you want to use a moving average or whether you want to say that the trend starts here, but you've got to come up with whatever the definition is. Alright, so same thing, probably the trend starts here and finishes here. Okay, let's run this one. So what I'll do first, I'm going to run it similar to the way it was last time, and then I put the ATR factor of 100, because remember in the logic here it says here the bar close of shift 1 minus start trend is less than the ATR factor times the ATR. So if we're going 100 times the ATR, then this is pretty much guaranteed to be less than that. So it's going to place all trades. So basically the filter is not going to be active at all. Also, I didn't explain here why I put this to 999. So when it's basically as a default, it's going to be 999. Otherwise, if it's 0 and we come through here, you're going to get the close minus 0, and then that's going to be a small number, and that's always going to be less than the ATR factor. Hence why I put it to 99999. And then when we actually set the price, then it basically becomes active and you can use it correctly. Alright, let's go back and do that testing. So I'll go OK. Fingers crossed. We've done a bit of live stuff here today. Let's run it through. And fantastic. So it did exactly what it's supposed to do. And let me show you. So it runs on a 5-minute. Remember, we didn't limit the amount of trades. We're just going to show you how it works. We're going to have a look at the daily here. And then we can see where it's placed all these trades. So it's bought up here. It's trailed the stop up. These ones have got closed out here. Then what's happened is we've kept it buying up here and up here. So again, remember, we're buying at the top of the trend, and then those have got closed out here, and when it bar closes below the moving average. Same deal here, and all these ones have got closed out here. These ones have been okay, these ones have been okay. Here we're buying at the top of the trend, closed out here, so on and so forth. So remember, we're measuring basically from when we have the crossover, we're measuring a certain distance. So now let's use that filter. So we'll make this 3, and we'll run the test again. Alright, it's a bit different result. Let's see why is that. So this time, same entry logic. What's happened here is we've stopped trading up towards the top of the trend. We're not taking any more longs basically after this bar here. So this would have basically disqualified us from on this bar. We couldn't take any more longs. Okay, so is this correct? I mean, we probably could have taken some more, but at least we haven't got stuck up the top. Same deal here, haven't got stuck at the top. Same here, we haven't got stuck at the top. Same here. Here we did take some losses, basically because we closed below the moving average. Alright, that was just a simple rule. So you can see here what we've done in this one. We've taken all the trades, we've got no filter, and we're taking trades all the way to the top of the trend in all scenarios, and we keep on getting stopped out. Here we're not taking them all the way to the top of the trend, okay, and we're not losing on these ones up here. So that is the basic concept. I hope that makes sense. What we could do is, let's just try this just for fun. Let's make this A2 ATR. So it's going to take less trades now. See if it makes it any better. Would you look at that? It's pretty cool, huh? So let's have a look. So again, we're just taking hundreds of trades. That's not correct. So look, it didn't make too much difference. Still trading pretty much the same spot. Let's make it 1 ATR. Probably actually quite similar. Yeah, it's fairly much similar, so it's probably this bar here that's stopping us from taking more trades, because we're probably reaching the limit on this one, so probably not making too much difference. But that is the basic concept. So we don't want to keep trading all the way up the trend. There's got to be some way to stop trading. Now what we'll do, I think, next week is we'll probably incorporate some of those shorts as well, and some of the logic that we had in last week's episode. But there is something to think about. Again, look, I've just tried to illustrate the concept with the crossover starting the trend, but look here, that's clearly not the best place to start the trend here. There's many different ways you can do it. You can use your own indicators that you like, and you can determine where the trend starts, and then you can apply this same kind of logic. Is the ATR the best way to measure it? Look, there's more sophisticated ways to do that as well, but you know, hopefully you can understand the concept and then start using that for yourself. Alright, one last thing before I go. We just finished the Algo Trading Conference, and if you were there, I'm sure you'll agree it was a fantastic event. I personally don't think that it could have been any better. We had fantastic speakers. I really enjoyed the presentations myself, not just because I work here, but as a trader, I am very keen to hear what these guys had to say. They were all brilliant, so thanks very much to Ernie and Roger, to Andreas and to Heim. Look, it became very clear that these guys are on another level, and the stuff that they will show you. Look, if you want to develop yourself as a trader, then you need to listen to them, and you need to start taking on board some of these concepts and using them yourself. It's very clear that they know what they're doing. Look, let me tell you, I never want to give up, or I never want to stop learning. If there's somebody who could do something better than me, I'm the first to put my hand up and say, please show me, so that I can try to make more money. So I hope everyone out there feels the same. And if you do feel that way, then give us a call and we'll start taking some bookings for next year. We haven't finalised the speakers yet, but I do have some really good ideas, and not just in terms of the speakers. I don't want to give too much away at this stage. We'll probably announce it if we're going to do it, but if we can get the idea that I'm thinking of across, then I'm 100% confident that everybody will want to be involved. So some pretty cool stuff probably happening for next year. At the very least, we'll equal and try to top the speakers that we had this year. What happens is, because we get involved with some people who are pretty well known in the industry, they always refer other people, and funnily enough, they sort of end up getting bigger and better. Although this year, they were pretty big guys, and all the speakers have been good and shown some great concepts. So either way, get yourself along to the 2020 conference. We'll update this site, but if you want to come, let me know ASAP, and we'll see what we can do in terms of organising a ticket for you. I will say, the sooner you get in, the better it will probably be for you. Once we announce the speakers, the pricing will be at whatever the full price is. Not just like a trade, if you're willing to take the trade early and take on a little bit more risk, in that you don't know who the speakers are, but you just know it's going to be a great event, then give us a call and we will see what we can do in terms of the pricing, which again will be at full price once we announce the speakers. That is all from me. I just want to say thanks very much again to everybody for watching this episode, and for continuing to come to the trading talks, develop yourself as a trader, come to the workshops. I really love it. Met some great people here at the conference, and it's great to see everybody. And I look forward to next week's episode and continuing to work with you guys in the future. Any questions, give us a call or an email or a Skype. I will be happy to try to answer them, and my details are there. Guys, thanks very much for watching, and until next week, all the best with your trading. Bye for now.